All right, I want to thank everybody for joining us for our third quarter guide to the markets webinar. And we've got some interesting information that we're going to share with you today. And I'll go ahead and introduce the part of the Fluent Financial team that will be joining us on the call today. Mike Lanise, the portfolio manager, Tabitha Garafa, who is our director of operations, and then Gabrielle Krylova. What we're going to be talking about today is the Fluent Financial app that Gabrielle's been working on that we're rolling out. We're going to talk about how the Dow Jones and S&P have lagged behind the FANG stocks. There's been a big disconnect there. Mike's going to talk about that. Impact of oil, the stimulus round 4, which will happen because at the end of this month, some of the stimulus plans are going to expire. Decoupling from China. China is a big problem, and regardless who wins the election, it's going to continue to be a problem for our country. And we'll talk a little bit about that and what we can do. Obviously, the presidential election, a lot of people are concerned about what's going to happen to the markets, to the economy. The future of cities. 25% of Americans have chosen, or basically have said they do not want to work or where they want to work from home and not go back. That has a big implication, especially for the heavy dense cities like San Francisco or New York. Economic update, and then COVID vaccine update. Not a lot of information there. There is some surprising information on hydroxychloroquine that I just discovered about 10 minutes ago that I'll share with you guys. That's very good. So I'm going to turn this over to Gabrielle to talk a little bit about the new Fluent Financial app. So Gabrielle, take over.
Hi, everyone. Thanks for joining us this evening. Yes, so exciting news. We have officially launched our Fluent Financial app. For those of you that do have access to the Orion client portal, it looks very similar to that, and your login information that you use to log into Orion is what you would use for the app. This app is available both Apple and Android app stores. If you want to search for it, it's Fluent Financial, but all one word. And again, the login info is the same as your Orion client portal. For those of you that either don't have logins or have forgotten their logins, just contact us and we'll send you your login information through your email, and you can just put it in and access your account that way. If you want to go to the next slide, Mitch. And so, yes, as you can see from these small little pictures here, the app looks very similar to the Orion client portal. That interface is very similar. There's a menu on the side that has a lot of pretty cool features that will allow you to view and download your monthly statements and tax forms, just different account activity. You can access your required minimum distributions. You can view your risk profile. You can view our newsletter and other blog posts that we periodically put out, and just so much more that you can do on the app. But it does just make viewing your portfolios a lot more accessible to have it on your phone instead of just having to get on your laptop or your computer and log it into Orion. So,
yeah. And one thing to remember, it's going to show you your RMDs, but this year, due to the CARES Act, you do not have to take your required minimum distributions. But Orion is showing that information for those of you who are over 70 and a half that had to start them, or for this year, those that are 72 and over. So you'll see that amount, but again, you do not have to take that this year.
Gabrielle, can you tell our clients how to access this app, or if they have any questions, who to reach out to?
Yes, you can give us a call, or you can just email me, Gabrielle@fluentfinancial.com, and we can help you get set up.
Okay, fantastic. Thank you.
Mm-hmm.
All right, Mike, why don't you talk to us a little bit about the markets?
You're not unmuted, Mike.
Sorry, guys. Mitch, can you go back, please? Thank you. Hi, everybody. Thank you for joining this call. So first of all, I just want to give a quick glimpse of what the market has been doing. So the green line is your Dow Jones, and your white line is going to be your S&P. And something that I want to make note of, from the highs of February, you see the Dow Jones is down almost 10%, whereas the S&P, now these numbers are through Monday, by the way, and the market's pulled back a little since then. The S&P is down about 4%. So you're talking about almost a full 6% discrepancy, 5.74% discrepancy. And a lot of that is due to the FANG stocks, F-A-A-N-G. For those of you not familiar with FANG, FANG is a group of 5 stocks: Facebook, Apple, Amazon, Netflix, and Google. So that's the quote unquote FANG stocks. So in the S&P, there's something called a cap weighting, and companies that are larger are cap weighted, so their influence on the index is larger. And because of the cap weighting of the S&P and the move that these stocks are making, which you can go ahead to the next slide, and the move that these stocks are making, these stay-at-home technology stocks, it's influencing the S&P more. So you're seeing what normally is a pretty close market. If someone says, what's the market doing? We tend to go to the S&P 500. But today, and usually the Dow is close by, but today you can't quite say that. 6% is a big disparity. What's the market doing? Well, which one? Are we down 4% from the highs? Are we down 9%, 10% from the highs? And if you look at these little numbers here, the filled in blue level down below is going to be your Dow Jones Industrial. And this is going to be year-to-date numbers. The green line is going to be your S&P 500. And then as you go up, gray is Google, purple is Facebook, red is Apple, blue is Netflix, and finally orange is Amazon. And we all know how Amazon's, well, I'd be surprised if anybody on this call isn't getting normal deliveries from Amazon every day. So Amazon really is leading the charge, and these stay-at-home stocks, all these are what I would consider stay-at-home stocks, or stocks that benefit from the current environment that we're in. But you can go ahead to the next one, please. So we just started earnings season this past week with banking earnings coming out. And so right now, Q1, the market highs were right around February 19th. So you really had the first half of the first quarter that was okay in the marketplace, with the second half where the COVID scare hit. Well, in Q2, it was all COVID scare. Now, mind you, a lot of it was market recovery. The lowest day of the market at the bottom was March 23rd. So by March 31st, that started Q2, and we've seen some recovery through that. But this is going to be important because we'll get to see the actual impact of what COVID has had on different businesses. Right now, expectations for earnings, you're going to hear a lot of so-and-so beat earnings. Well, that's because expectations were so low. So I wouldn't get overly excited or overly disappointed if people are missing. A lot of companies have stopped giving guidance because they just don't know what is going to happen with their Q2 numbers that we're seeing now come out. If you look at my last bullet point here, I talk about top 10 S&P companies represent 20% of its value. That's that capital market weighting, that CapEx weighting, and it includes Apple, Amazon, Facebook, and Google. So it's definitely having an effect in causing a disparity between the Dow and the S&P. Go ahead to the next slide, please. So oil is another thing. Now, those of you that have heard our talks in the past know that as energy started falling in February, we increased our weighting of that, and it is still down significantly from the S&P. If you look at this chart, you can see that the difference between the S&P from its Feb 19th high and the difference with I use the West Texas Intermediate, but I'm just saying that that's oil. Oil has lost 10 times as much as the S&P has from its market highs. Something that I wanted to make note of, though, the oil stocks still kick off a lot of cash, and as demand ramps up, the price of oil is going to increase, and these companies are going to rev their engines back up. We saw a 3% increase in oil the other day. I guess it was Monday or Tuesday, and our V&O portfolio outperformed the S&P by 1.6% just for that little 3% move. I don't think that we are going to do less than we are doing now, less travel, less flying. If anything, it's just going to continue a slow ramp up until we hit a vaccine or until hydroxychloroquine or remdesivir, until these are proven, then people get out more and more and more. So I think oil has one direction to go from here. I don't think it's going to go down. We're either going to slowly flatten and go up, or we're going to take off as soon as a vaccine occurs. So anyway, I still think we're well positioned, even though it's a drag on the portfolio. Congress is still talking about another round of stimulus. I heard more today about stimulus. They're having some hangups as to who's still going to get a paycheck. One of the concerns is that people are getting paid more now. I think the stat was 60 or 68% of people are getting paid more now in unemployment than they were getting paid on the job. And that's that additional $600 that was put in for people unemployed, rather, no matter what their original pay was at their old jobs. And Nancy Pelosi would like to keep that in this new agreement. And the Republicans are saying, no, we need to entice people back to work. So there's going to be a little bit of sticking points on that. Trump is on board with another round of stimulus. But before, there was a cutoff of $75,000 for households. When I say cutoff, if you made more than $75,000 for your household, the amount of benefits you were receiving started to go down. Now they're wanting the cutoff to be $40,000, not $75,000. So we'll see what happens. But if that cutoff does occur, 20 million Americans will be affected by that for relief money. Next slide, please. Okay, so if you guys remember about 5 months ago, before all the COVID, every day it seemed like the headlines were China this, China that. We were having trade agreements with China, phase 1 trade deals. Well, since all that occurred, China signed a phase 1 trade deal, and then COVID hit. So
hold on one second, Mike. Clark, it looks like your computer is not muted. I don't know if we're picking up background noise from you. If you could please mute. Go ahead, Mike.
Okay, so what's going on right now is the president is, for any of you who've seen any of the press conferences, the United States and particularly President Trump are really irritated at China and the World Health Organization, or WHO. And the reason they're irritated is because they feel like WHO is in the back pocket of China. China's controlling the narrative on the virus that China really released onto the world. So and this timeline here says on Jan 14th, the World Health Organization tells everyone Beijing knew about these cases back in December, and I think Mitch is going to bring up a point that the lab around Wuhan started going dark in September, so way before this all came out. So the consensus is that China was holding information back and telling the World Health Organization what to say. And if you guys have not heard, we are pulling all funding from the World Health Organization. That announcement has already been made, and it goes into effect a year after it's made. So we're probably 11 months away from that actually taking place. But this last bullet point says that the World Health Organization announced that China had provided the necessary data on the virus in mid-January, when that was not a true statement. A full month after initial data and information had been reportedly destroyed, and a week after officials had reported that it still had not been identified. I mean, these are just flat out false statements. So here's the timeline. So what I think is important to look at here is Wuhan on lockdown on January 23rd. So the second bullet point. So remember, January 14th, the World Health Organization was telling everybody that this could not be spread. Wuhan goes on lockdown on Jan 23rd. That's not lockdown from the rest of the world. That's on lockdown from Wuhan going to other places within China. So China locked down Wuhan, and then started chastising other countries that weren't letting flights come in from China. So they basically willingly allowed this virus to spread. So there's other important points on here. WHO declares COVID a pandemic on March 11th. Seems a little bit late, if you ask me. So I'm glad we're pulling funding from them. I don't get a warm and fuzzy feeling that their interests lie with the health of the worldwide community. Next slide, please, Mitch. So additional decoupling from China. If any of you have heard of Huawei, Huawei is one of China's main computer companies. I don't know what you would relate them to in the U.S. Maybe a Microsoft, maybe a Google, but they have hardware. So maybe even a Cisco for us. And what they're doing is they're going into countries and giving away their software and telling companies you can pay us later. And these countries are beholden to China. Well, any company in China, by law, has to give information to the Communist Party on request and help assist the Communist Party. So the fear is that Huawei has equipment, hardware all over the Western world and is using it to spy. So the U.S. is already banning that hardware, and this past week, the United Kingdom announced that it would also be banning Huawei 5G equipment. So that really is kind of a poke in the eye to the Chinese, and we're hoping that other Western countries will follow. And ties between China and UK have been deteriorating. I believe that the world is opening its eyes up, seeing that China is really not a nice player in all this. And so decoupling from China continues. Trump administration has curtailed exports of certain technologies to China, while Congress is moving to restrict Chinese access to the U.S. capital markets. And Mitch wanted me to bring up the story of Luckin Coffee. That was supposed to be the big competitor to Starbucks. Luckin Coffee, I think they're in the process of being delisted from the stock exchange. They were faking multiple millions of dollars in sales, and their stock was taking off because of it. And once that came out, the stock dropped like a stone, and U.S. investors were stuck holding the bag on all these losses in it. So I think more and more we're going to be seeing operations set up in Vietnam, Taiwan, India, just various places. I think Apple has a lot of business, a lot of factories in China. Apple's going to need to figure out what they're going to do with their supply chain, and I think a lot of other companies are facing the same thing.
Yeah, Mike, on the Luckin thing, the thing that's important that I want you all to realize on the call, everyone remembers Enron from 2001. They were basically a house of cards, and then the company failed and caused a lot of problems. Well, Sarbanes-Oxley was passed to basically require companies to certify that their accounting records were accurate, they weren't cooking the books. But the Chinese lobbyists, again, both parties, Republicans and Democrats, for decades, basically allowed these Chinese companies access to the U.S. equity markets. They wouldn't have to be compliant with Sarbanes-Oxley. And Luckin is the most recent example. So you're seeing a movement to get these Chinese companies to be compliant with Sarbanes-Oxley, so it's an even playing field with everyone else on the indexes, or they're going to be kicked off. China does not like that, but China is starving for U.S. dollars, and this is another way for them to get money into their country because the RMB, their currency, does not work well. So they're trying to get as many dollars as possible. So this story hasn't been covered as much, but it is important. This national security law, I'm going to have Gabrielle tell you a little story because she's lived in Hong Kong for a while and has friends there. But the national security law is basically the Chinese have reneged on their obligation with the United Kingdom. They were going to give the United Kingdom or Hong Kong 50 years before they would take over from 97 to 2047. Well, the passing of this national security law basically has basically taken over Hong Kong early, and just shows another example of China's aggression. So Gabrielle, why don't you talk a little bit about what you've heard about Hong Kong lately?
Yeah, so I still have quite a few friends there who I still frequently keep in touch with, and just from what they've told me, it's a pretty scary situation right now. The good news for some of them is that the UK has extended rights of residency for 3 million eligible people that have the BNO, the British National Overseas Passports, born after 1997. So after they've been there for 5 years, they could then apply for UK citizenship. So that's really good news for a lot of people there that can get out. But unfortunately for those not eligible, there really are no options for them. From what they've told me, Hong Kong is quickly becoming a surveillance state. There are bookstores in Kowloon, where I used to live, that have already closed down, with many of those shop owners being sent to mainland China, charged for spreading Western propaganda. That's so significant because keep in mind that Hong Kong has always been a hub and almost a beacon for free press since 1997, when that one country, two systems process was set up. They've always welcomed political refugees from not only the mainland, but those fleeing other communist regimes, journalists, love him or hate him, Ed Snowden, even at first, because of that freedom that Hong Kong has always prioritized and valued so much. That's so important because that freedom of press, the freedom to read and think for themselves, is what is at stake here, and that's what the state is trying to take away from them. So they've been fighting this battle to defend their autonomy from China since day one, and sadly has not been successful. So, which is a shame because those left behind in Hong Kong, they're going to have a pretty rough time ahead. So,
yeah, thanks, Gabrielle. Mike's going to talk a little bit more about some information about what we see happening with the potential elections, and this will change.
Yeah, so I had a call today with one of our clients who is on this call as well, and his concern was, should he go to cash? It looks like Biden may win the election, or what is the scenario of going to cash if Biden wins the election? First thing, right now, Biden is showing up 9% in the polls, and Biden has been pretty much locked in his basement this whole time as he gains in the polls. Mitch, can you go to the next slide? I wanted to show you guys this. So we're just over 100 days out from November 3rd. At this time, 3 months out before the 2016 election, the polls were showing Hillary Clinton with 100% chance of winning. When I say the polls, I think like 95% of them had her at 100% chance of winning. Not only that, 3 days before the election, they had her at a 98% chance of winning. And we all know how that turned out. So my point is, we want to be careful of the polls, because I think that these polling places tend to skew towards the Democrat versus Republican candidate. I don't know what's going to happen, but also when Democrats are in office and when Republicans are in office, the S&P still goes up. Biden said if he gets in office, he's going to raise taxes. I would argue that that would not deteriorate the S&P, but that would probably slow whatever growth a plan of reduced taxes and reduced regulations would do. If Trump takes over, again, if Trump gets a second term, I think he's been handling China with kid gloves. I think we're going to be in a full-out Cold War with China, and there's going to be some companies that are really going to feel some short-term pain with that scenario. So I think in either scenario, there are some warning signs, but the market's going to do what it's going to do. The problem with going to cash, or the problem with getting out, is when do you get back in? After it goes back up 10% and you've missed it? I just think staying involved in the market, finding companies that are undervalued, and meeting your long-term goals while making sure you have short-term cash needs on hand, I think is probably a solid strategy. I don't know, Mitch, if you want to add to that, but anyway, I just think it is. People not be scared in this upcoming environment. The world is going to move forward.
Yeah, Mike, that's a good point. The other problem is if you go to cash now and the market runs up between now and the election and Trump wins, you miss that run up. So you go back in and you buy in at a much higher market, then the market goes down, then you're going to have a much bigger loss because you didn't have the run up because you went in cash too early. So you get killed twice. So it doesn't mean Mike and I are going to keep, our heads buried in the sand and keep things fully invested. Depending on how it's looking heading up to the election, we will probably be raising more cash, increasing put protection, which we don't have in our portfolios currently because puts are too expensive. But that's something we're going to be looking at. And again, what we would recommend is anybody that has concerns, reach out to us and we'll talk to you about your own unique situation and viable solutions. We had a call with one of our clients, and they had about half of their income and assets protected and guaranteed. And when we pointed that point out to them, they said, well, we don't need to make changes to our portfolio. So everyone on this call has a unique situation. So we will, as we do, we have 10 portfolios, but we can customize it for whatever your needs are. So the next slide, and those of you who have been clients for a while have seen this slide. This is the latest iteration. This is the percentage of Republicans and Democrats who rate national economic conditions as excellent or good. And what I want you to take away from this is when whoever's in the White House, if it's George Bush, Republicans thought the economy was good. If it was Barack Obama, the Democrats thought it was much better than Republicans. And this crossover line is when Trump got in office, and you can see the big downturn for all groups, and this is because of the COVID virus. But again, I think whoever's in the White House, you feel like the economic conditions are better for that candidate. Mike, talk a little bit about what we expect to see happening with cities.
Yeah, so I think something really scary is going on. When I say scary, disappointing in our cities. So I grew up in the Northeast and was around New York City in the 80s when it was dangerous. And then Giuliani came along and really cleaned it up, and New York had about 15 years of just awesome. New York was the place to be. And now you see de Blasio, Mayor de Blasio, they're being soft on crime, and the taxes are so punitive there that it's really running people out of this city. A statistic, 70% of New York City employees commute to Manhattan to work there. Well, that's all pretty much stopped with the COVID. People are starting to work more and more from home. And when you have the technology to do this, this was already a trend that was occurring, but I think the COVID virus sped this trend up by about 3 to 5 years. So that now you have a commentator was on the Business Channel the other day I was listening to. He said he's on 6th Avenue, which is just east of it runs north and south on Manhattan, just east of Times Square. He's in a 60-story office building, and he said there's 6 people in the entire building. No one's there. Everyone's working from home. Business is moving forward, but people don't need to have all this office space. People don't need to spend $3,000 to live in New York City in a 500 square foot apartment that's close to a subway line. My sister sells homes up in Darien, Connecticut. It's about 3 subway stops outside of Grand Central. And one of the things that she told me is this last bullet point. People are fleeing New York City and finding space out in the quote unquote country. I said, okay, well, where are the people? People are selling their homes to them. Where are they going? She said they're leaving for tax-friendly states. So the people that can get out are getting out. The problem is there's not a lot of houses to buy, and those that are selling their homes are getting out completely. And Mitch and I had talked about this a little bit today. Think of the tax base. New York is the gem. New York City is the gem of New York State. If people are fleeing the city and people are fleeing the state for a better living, a better lifestyle, not a 2-hour commute every day, what is that going to do to New York's tax base? And I just think cities like San Francisco, Los Angeles, New York, Chicago are in real trouble. Add to that, so Dallas is a Democratic city. So all these blue cities that are having all this uprising, like Portland and Seattle, why isn't that happening with Dallas? And our police chief, there was a protest the other day, and the protesters were warned not to walk across the Margaret Hunt Hill Bridge because they'd be blocking traffic. They did. they all got arrested. Some 60 plus people got arrested. And the police chief came out and said, my job is not to make you feel good. My job is to enforce the law. And I don't see that happening in other blue cities. So Houston seems to still be in good law and order. Dallas seems to be okay. Austin seems to be okay. So I don't know, it feels like there's almost like a political motive behind this, whether someone's going to enforce the law or not during these times. So anyway, I hope the best for our cities, but I would not be investing in the real estate market right now, in commercial real estate. But 83% of people say that the office isn't necessary for them to be productive. So there you have it. Mitch, can you go to the next slide, please? Yeah. So this is our stock income portfolio. For any of you that are familiar with this portfolio, this is something that my dad and I have been doing for my mom for 25 plus years, where we invest the money in stocks, dividend paying stocks, and then we sell additional calls against it. Basically, we're agreeing to allow someone to buy the stock from us at a higher price, and people pay us for that. So this portfolio here shows, the blue line shows the average portfolio value on the left-hand axis, and the green line is showing the amount of cash we generate every month on the right-hand axis. And you see that big dip there in the green line for the Feb to March expiration. Well, what's happening is that's when the S&P fell 34% between those two expirations. And I did not want to generate 1% for someone's portfolio and lock in a 30% loss as the market bounces in our face. So I was very delicate about selling calls. And as you see, that green line continues to grow, as well as the blue line continues to grow as we recover from this. And we're still generating a decent amount of income. The average percentage of cash that we've been generating is 1.11% a month, meaning for every $1 million you have in this portfolio, I'm generating over $11,000 for you per month before tax. So the portfolio is doing what it's supposed to do. So moving forward, Q2 earnings that we're in right now are going to show us how bad the damage was from all this coronavirus. Congress is still talking about additional stimulus, and the Fed is also keeping their stimulus doors open, a term called "Don't Fight the Fed." The Fed is going to make sure that we are not going into a bad recession, or they're going to do whatever they can to ease a recession or keep us from going into recession, even though we're already officially in a recession right now. Decoupling from China will be painful short term, but very beneficial long term, I think, to both our companies and the security of our nation. If Biden is elected, we talked about, he's already said that he's for higher taxes, and that would slow the recovery. If Trump gets elected, we're gonna have a pretty heated battle with China, which may be coming no matter who gets elected, is kind of the way I'm seeing it. Work from home will transform American cities and any sort of commercial real estate. Remember, commercial real estate, these deals are 3, 5, 10-year deals that people sign for office space. So that's going to be slow to come, but you're going to see, I would say we're really going to start seeing the impact of that 5+ years from now when people just don't renew their office space. And then the speed of our recovery depends on the vaccine and how quickly we can get it out, and how much people are playing politics with any sort of cures between now and the time a vaccine comes out.
Great, Mike, thank you very much for that update on the markets. It's always interesting. One of the items Mike and I have been talking about is, as the markets become more stabilized, you're going to be seeing higher income from the stock income portfolios. And we basically told people who have that portfolio expect 1% per month. And I think we were averaging about 1.5% before the pandemic hit. We hope to get back to that level. So that's going to generate a lot of income for those of you that are retired and need the money.
Mitch,
yes.
Can I just add to that? So bonds, the 10-year treasury is still paying under 1%. It's paying around 65 basis points. Right now, I have exposed the stock income portfolio, or put at risk, 45% of the portfolio, meaning we may be forced to sell out of 45% of our positions, meaning 55% will participate in any upward moves. Of that 45%, we've already generated 1.17% cash. So think of it as $11,700 for every $1 million invested in that portfolio. with only 45% of the portfolio exposed. So that portfolio is well on its way to getting back up above that 1% level already.
Okay, thanks, Mike. This chart here, this is economic recessions, and the bigger the circle, the bigger the decline. The y-axis is the length of the recession in years, and the x-axis is years. So obviously the Great Depression, we're familiar with that from history books, and nobody's alive who's on this call. But what's interesting is the recession that we're in now is the second worst after the Great Depression. But what's interesting is this one's only going to last probably 6 months. And you can see here, it's about 6 months. And then you look at the second longest recession over the past, 100 years. It's the housing crisis of 08 and 09. We had about a 4% drop in real GDP. So we're living through some very difficult times. One thing that's interesting, most of the people on this call are baby boomers, and I doubt there's any millennials other than the people that work at Fluent on this call. But if you look at these two major crises, a lot of the millennials and then the Generation Zers who are behind them, these are some pretty catastrophic events affecting them early on in their careers, and they have a much more different viewpoint of what work is and what loyalty is to a company. And a lot of the protest is a lot of what they believed and what was true is not, and they're rebelling against it. The frequency of economic activity, what we're trying to show here is, this is how we were doing pre-COVID, and then we had the lockdowns and the various types of industries. So here's the minimum, the low water mark for each of these respective industries and where they are now. And starting with the bottom, you're looking at TSA travelers. So these are people flying on planes, and it hit a low point of about 96. Now it's at 79. And because of COVID is so highly contagious, very few people really want to get on a plane unless they absolutely have to. I've not seen reports of a lot of people getting sick with COVID from flying, but I still think it's one of these situations. Just my personal recommendation is I wouldn't get on a plane unless you needed to. The USC to diners, you kind of see the low point here. They gradually opened up, and you see these up and downs. This is the people opened up, shut back down, went from say 75% to 50 or 25, or California shut down again. And this industry, and we've talked about this on prior calls, is going to be really adversely affected. I think your small mom and pop diners and restaurants that we really enjoy, unless they're well capitalized, a lot of them aren't going to exist anymore. So it's been really, really sad. Hotel occupancy is the next one. 69%, 42. It's probably going to come back gradually. Global flights is about on the same trajectory. It's better than ours because some of the countries in Europe and Asia have done a better job of keeping the virus suppressed. But the good parts, or the areas that have had better growth, has been driving. Candace and I took about 8 days off and drove to Colorado last week and had a great time. But it was the first time we've been on a driving vacation in years, and a lot of Americans are doing that. But the other part is with the Federal Reserve printing all this money, keeping interest rates very low, the 30-year mortgage rate dropped below 3%. So any of you that have mortgages or are contemplating getting a second house, now is a great time to get some really, really cheap money. And the other part of this is the housing market has been white hot. I know a number of people have tried to sell houses, who've sold them, who've gotten above asking price, where some people are so excited about buying the house, it doesn't appraise for what it's sold for. They said, I don't care, I'm going to bring cash to closing. So that's what's happened. So it's going to be good for the housing sector. I'll talk a little bit more about that here in a minute. If you look at global high frequency activity, DM stands for developed markets. That's Europe, us, Japan. Emerging markets is the rest of the world. And you see similar graphs for both, and you have time frames on the bottom and then the percentage drop. What I just want to point out here is if you look at South Korea and Taiwan in the purple shaded, because the mass culture and a higher trust and belief in the government, they were able to suppress the virus much more quickly and keep it suppressed. So they didn't have the big dip as the rest of the world did. And they've gotten back to pretty close to normalcy in terms of mobility. U.S. economic leading indicators, and this is from ITR Economics, and the next few slides is going to be from that institution. And it's just showing, you can kind of read through this at your leisure, but most of the declines in the bottom is going to be April or May of this year for most of these cycles. So we're seeing a recovery, and I think it's important. Yes, the Federal Reserve and the federal government supplied lots of capital, but our economy was in such good shape before this happened. So the way to think of it is, if a professional athlete catches the flu, he or she can recover quicker than someone who has some comorbidities, who may have diabetes, who's older. It's going to take them a lot longer to recover. So same analogy applies with our economy. So now I'm going to go into a little more detail. And these slides are really dense. I apologize for that. I'm just going to hit kind of the highlights. And the first thing I want to point out to you, so you guys know what you're looking at, ITR has this phase key. And starting out of a recession, you have blue, which is recovery. Accelerating growth is green. Slowing growth is this orange colored. And then recession is red. And these colors represent what they expect these particular segments of the construction industry will be as of the end of the year. So we talked a little bit about earlier about how cheap mortgage rates are. And this 12 over 12, this is running 12 months, and this is what they expect as of the end of 2020, 21, and then 22. Housing's not really going to have a significant dip, which is pretty expected. The other thing that's interesting is, Mike talked about fleeing cities, and what are one areas of real estate that's really going to boom? Private warehouse construction. So your Amazon centers, your distribution centers, also your technology, your hubs, your cloud facilities. You're going to see big growth there in those sectors. The other areas are going to be lagging behind that. So if we go to the manufacturing area, again, manufacturing is more involved. It's more capital intensive. You have longer production lines. So you're going to see most of these industries as of the end of the year are going to be in a recessionary pattern. They're recovering out of quarter 1 and 2, which is going to be horrific. In 2021, they're going to do much better. One industry that probably will hold up well, and especially if we have conflicts with China, is defense. So that area will continue to do well. We have investments in that sector currently in defense companies. Medical supplies, and protection. This area has gone down a little bit, not as much as the others. It will probably have good growth. Food production, you're thinking, gosh, we're at the grocery store, but a lot of the other food that requires manufacturing or people to do that has actually had decreases. So, and this sector's had some volatility in it. If you look at the core U.S. economy at a glance, this is kind of a summary, and they're basically all the same. You're going to be looking at recessionary standards for all of 2020, and then very solid growth in 21, and then more moderate growth, slowing growth in 22. The global economy, very similar to the U.S. The difference is China. Again, ITR Economics is using the information they have. Anytime you see China's numbers, you got to kind of put an asterisk next to them and wonder if the numbers are true or are cooked. But the fact that they shut down their country really hard, and they have, it's a communist country, you do what the government says or you have bad consequences, they're not going to have this severe pullback as, say, like in India or Eastern Europe. Mexico's had a tough time too. A lot of these third world countries don't have the same kind of medical systems in place that we have, so that they're going to be hit harder with the COVID pandemic. The U.S. economy, from a financial aspect, ITR economists, you see the gray here, they are always very cagey about what's going to happen with the stock market. But I read a report on U.S. stock prices that's more detailed, that goes beyond this report. They expect that we're going to reach new market highs in the third quarter, and the market will continue to rise going forward for the balance of the year and into 2021, regardless of who wins the election. And I follow the Bolio brothers who are behind ITR, and they've been around since 1948. They're politically agnostic. They don't care who's in office. They're economists. So they think even if Biden gets in, it's not necessarily going to be horrible for the economy. So, and the other part is on long-term government bonds here, and Mike had mentioned this before, you're getting no return at all from bonds. We're literally being pushed into the stock market. So how do you create a paycheck when you retire? Stock income is one of the ways, then covered calls and the other portfolios. The other area I'll talk about is futures prices on oil. We're at $40, $41 a barrel right now. They're saying that oil is going to be around $33 a barrel, which is something that Mike and I don't agree with on the research that we're finding. Their justification for this is if oil stays above $40 a barrel, there's enough people that do fracking that find that advantageous to start drilling and producing more, which will bring on more supply, which will bring the price down. I think that's a bit too conservative. So we think $40 a barrel is probably going to be more realistic for the balance of the year, and it probably will go up from there. On the COVID part, don't have a lot of information here on this part. I enjoy talking about this more than most people, so my team said cut this stuff out. So we have daily increase in cases. This is in tens of thousands, and you can see that Europe has decreased. North Asia, which is again that's South Korea, Taiwan, China, a little blurb here, and they clamp down. And the reason for this is wearing masks is the primary reason, and masks make a huge difference. North America, we were not going down as much. Then we got to Memorial Day and we spiked up. Kids going to bars, the protests, people just get corona fatigue. Latin America has exploded, and this is basically Mexico all the way, including all of South America. It just, my heart goes out to the people there because they have very poor medical services, closely dense villages or cities, and they're having a tougher time. Southeast Asia, this is India, Pakistan, Bangladesh, they're seeing a spike up similar to Latin America. But if there's any kind of silver lining behind this and this next chart, when I was looking at individual countries preparing for this, they're starting to see a plateau. So we're not seeing this, rocket ship escalation, the number of cases in those countries. And then in Dallas, I don't know what it's going to be today. We've had 2 days below 1,000. I think it was 700 2 days ago, 413 yesterday. And again, wearing masks works. And if everyone wears a mask, we can solve this till we get a vaccine.
Hey, Mitch, I just want to add one thing. The United States has tested more people than the next 10 countries, I think, combined. So I don't think it's crazy to think that we are going to show more cases. So that's why I think that slide on the right-hand side, Mitch, is so important, the death count.
Yeah, and the death rate, and again, it was just horrific what occurred in New York and the Northeast. There were some bad decisions made by putting sick people in nursing homes in New York and New Jersey and Pennsylvania. We learned from that. Europe had this big spike up, and Europe was much more compliant with wearing masks. But the death rates are across the board. Latin America is spiking up because the number of cases are, but the therapeutics that they're finding that you can use to treat this disease are becoming more readily available and being used. The vaccine is going to be the gold standard. And the coronavirus, and this is the vaccine development months from the viral genetic sequencing from to the first human study. This is a record. We're talking like 4 or 5 months to develop a vaccine, then put it in the testing. And there's a number of companies and countries that are getting trials into phase 3. So there's probably high likelihood that we're going to have a viable vaccine this fall, probably no later than the end of this year. So that's very, very good news. And I've talked in great detail about the coronavirus in the past. I can talk to you guys individually if you want to know more. This is a slide I just discovered about 20 minutes before the call. And this HCQ is hydroxychloroquine. And it's gotten a lot of negative press in this country. And Mike had talked earlier about the politicization of hydroxychloroquine earlier. And if you look here, no hydroxychloroquine use. Here are the countries here, which is primarily Europe, and the countries that got hit hard first. Mixed use, where they use a little bit of it, and then the green, where they use it pretty extensively. And you can look at this, you can see the fatality rate. This is a case fatality rate, CFR, is significantly lower when you use HCQ, and the key is to use it early and with zinc. These countries here don't have the same kind of politics we have. They just want to get their people healthy. And in a lot of ways, I wish Trump had never mentioned the word hydroxychloroquine, because I think a lot of Americans may be alive today. It just makes me angry that the medical community, the media have poo-pooed its use when there's scientific data now that's coming out that show it works. And there's a number of doctors, and I've got medical protocols from doctors and people that I know. I can't put it on our website because we're not a medical area. But if anybody on this call gets sick or has a family member gets sick, give me a call and I'll share with you some information that could really help people. Because this is a wicked disease, but if you can treat it early, you can have a much better outcome. The other thing I want to mention before we kind of wrap up, Sweden. We talked about this a couple of 3 months ago, and Sweden, unlike the rest of the world, decided to say, we're not going to social distance, we're not going to wear masks, and we're going to put our elderly or protect our elderly and the vulnerable people in safe areas, and we're going to go for herd immunity. So Sweden got a lot of negative press because you saw this big increase in daily deaths here in April. Then if you look from mid-April to now, pretty low death rate. It's really clamped down. And then daily new cases, basically at the end of June, it's fallen off a cliff. And I don't know if Sweden has reached herd immunity, but I'm sharing this with you in case the vaccines don't work. This may be a trajectory that we may have to follow with therapeutics and just treatments to help people. So in summary, we talked about the app. Mike talked about the FANG stocks. You have 5 stocks that is holding up the NASDAQ. We talked about oil. The stimulus will happen. Both the Federal Reserve and the federal government have said they're going to do whatever they need to support our economy. China is going to be a huge problem. And regardless if Biden gets in or Trump gets reelected, we're going to be having a Cold War with them. The presidential election, we got a lot of ground to cover before that goes on. I think you'll see some interesting developments coming out of the debates. 20–25% of people want to work at home and never go back to the office. The high-dense cities are going to have some very dramatic repercussions because of that. We talked about the update, and then COVID and vaccine. I think we are going to have some kind of solution in the interim. There's enough therapeutics out there that if given early, you'll probably have a very good outcome. Now I'd like to open the forum for questions and answers to the group. So if you want to unmute Mike's tab, you can.
I hit it, but they can also type in their questions as well in the chat.
Sure. So you guys can either speak up if you'd like, or type in a question.
Lori from Portland, Oregon. Just want you to know I'm going to apply to become a professional rioter because I think the pay for them is pretty good. But I have to say the gassing, is hard on your eyes, and my skin probably would not look as good. All right. All that aside, I just want you to know that in the burbs we're safe, but downtown just looks like, I don't know, it looks like a shelled out, it's horrible, and I feel horrible for that part of it. But I really do feel there probably are some professional rioters that late at night are the ones that are starting the fires, and they're giving the peaceful ones a pretty bad name. And so there are challenges being living in a liberal Democrat-run state and city. Can I just say that? Yes.
Well, Lori, thank you for your comments. I guess You could wear a helmet and goggles to protect your eyes.
I'm sheltered at my ranch, and we're very conservative.
Go ahead, Mike, say that again.
I don't hear nobody.
No.
I don't hear anyone.
You know, Mike touched upon the question about going to cash, and if you know if the election goes a certain way, again, we just don't think that's wise at this point. But we will take precautions as we get closer to the election. But we have a lot of ground to cover, and there's going to be a lot of economic news that goes forward. You know, if AstraZeneca's vaccine with Oxford comes to fruition, one benefit of that vaccine over, say, Moderna or some of the other ones, or Pfizer, in addition to promoting antibodies, it promotes T cell growth. And the advantage of the T cell growth is it has a long memory where you may get vaccinated and have immunity for years versus a few months, which some of the other vaccines may provide. So that's potentially some good news, but you'll probably read more about that as it comes to the forefront, because that again, that's going to be the gold standard. So if we don't have any other questions, I'm going to end this call. Again, appreciate all your faith and confidence in Fluent Financial. Please reach out to us if you have any questions. Have a safe summer. Wear a mask if you're going to be around other people. That is the best thing you can do to prevent from getting sick. So again, thank you for your time and participation.